And to discuss the positive sentiment around the upcoming India-U.S. trade deal, we have with us Professor Abhijit Das, former head of the WTO Center at the Indian Institute of Foreign Trade, well-known international trade expert. Thank you very much, Professor Das. Now, how does this deal secure better terms for India? Minister Goyal says that it's the best of its kind deal in the region. What specific concessions do you think may stand out?
Thank you, Mark, for inviting me on your program. It's always a privilege and pleasure to be there with you to discuss trade issues. We have to recognize that if India is going to get a reciprocal tariff of 18% from US, this will be relatively lower than what US has extended to, say, Bangladesh, to Indonesia, to Malaysia, to Vietnam. Although the difference may not be very significant between what some of our competitors may have secured, but even 1 or 2% makes a difference, particularly in labor-intensive sectors. So we should be in a position to see an increase in India's exports to US on account of substantial reduction in the reciprocal tariffs. And this edge should translate into increased exports of textiles and clothing, or leather products, and gems and jewelry as well, and not to forget marine products.
Indeed, so you have mentioned some industries that are expected to benefit the most, but how significant could the export growth be in measurable terms? I mean, you talked about textiles, as pharmaceuticals, IT services, agriculture, all of them.
Much of the growth that we will be witnessing will happen in the next 4 or 5 months. That was the time when our exports would have taken a hit if the 50% tariffs had continued. Our exports to US have done not too badly considering the 50% tariffs, but the real hit would have been witnessed a few months down the line. Now, the imminent agreement will certainly insulate us from that big hit. So to my mind, that will be a very, very big gain for us. Of course, we will have to await the fine print to see the terms and conditions, to also examine what concessions we have given to the US and assess their implications.
Now, Minister Piyush Goyal emphasized safeguarding agriculture and dairy. So how has India balanced protecting domestic farmers while still opening markets to perhaps US products now? But also, if we can look at some of the other FTAs with the EU, for instance, the same thing has happened.
One possibility is that India might have agreed to give something called tariff rate quotas. Now, again, as I said, we need to await the fine print. And if we have indeed given tariff rate quotas, then the crucial thing there will be what is the size of the quota, what is the share of the quota in our domestic consumption of that particular agriculture product, and also is there a floor price attached to the quota? Why the floor price is important is that, as you and our audience would be aware, US agriculture is heavily subsidized. So if there's a quota and if there's a floor price, then that could go some way in protecting our domestic sensitivities.
Professor Das, also, how will a deal with the US, look at the big picture, reshape India's strategic positioning in global trade?
Certainly, it will strengthen our hands with other countries. We are negotiating agreements with Canada, for example, as well as with GCC and a few other country groupings. A trade deal with US certainly strengthens our hand. It strengthens our export base. But at the same time, it also emphasizes and highlights the need not to remain dependent on a single market, and therefore the need to diversify our export market. So all these would be some of the lessons that would be evident once the trade deal gets signed and starts getting implemented.
Also, Professor Das, positive sentiment is pretty high now. But, what sort of kind of reforms are required or follow-up agreements would be necessary to sustain this kind of investor confidence, one can say?
I think if any reform which is required domestically is in terms of, I would say, two tracks. One certainly is on the labor front, where the government has been very active. The other side of reform really relates to cutting down our costs on account of infrastructural problems, on account of, let us say, transaction costs, or on account of raising finance for manufacturing sector. So reforms will have to take a comprehensive view and address all these aspects which create hurdles, which raise the cost of production in India.
Now, a final question, Professor Das. So we know that this deal is imminent. The minister has said that, final stages, and then there will be a joint statement that will come out, which will give all the details. What do you expect? I mean, when will this happen?
Very, very difficult to say. We can't even be sure whether it'll just be a short summary sort of outcome, which is what President Trump has signed with, let us say, Japan, Korea, or European Union. Or will it be a detailed trade deal the way it has happened with respect to Malaysia and Cambodia? So I would be very, very hesitant to stick my neck out in terms of the format of the agreement as well as the timing. But maybe within the next couple of weeks, if most of the contentious issues have been addressed, then it shouldn't take more than a couple of weeks.
We leave it there. Thank you very much, Professor Abhijit Das, former head of the WTO Center at the Indian Institute of Foreign Trade, expert on international trade. Thank you for joining us.